Bar, it is very near. He has already taken us through the PCET practical guidance how to fill up, and he has taken his time out and answer all the queries. I, on behalf of the Chamber of Tax Consultants and the members present here, present I have to thank you. Now we have a small break for 10 minutes here only, then we will listen for the last session. Thank you.
What are the methods, various application sections? We should have a panel discussion where whatever we have learned, we should try to confuse you. And in view of that, we had Mr. Vispi Patel who said, I would like to confuse the audience by making several case studies. Maybe they should go home so that they should come and consult us again. I thank Mr. Vispi and our concurrent guide and advisor Mr. Kumar Jain for having done a wonderful job in helping us to structure this program. Vispi especially for guiding us in structuring every session and helping us in coming up with this last session. All the 4 case studies are made by him personally, and he has circulated very in advance to all the panelists. Friends, there are more than 200 participants. People have come from various cities outside Bombay. We thank you everybody to come and give an overwhelming response to this course. Before I tell the panelists and the chairman of the panel, or you can say moderator, Mr. Vispi, I request Mr. Ajit Shah to formally introduce the panel and then take it forward.
Good evening, friends. We have got galaxy of stars, not film stars, professional stars. Now, first, Mr. Ajit Kumar Jain. He has cleared his chartered accountancy since 1988, and he became an IRS in 1990. Presently, CIT Beyond representing TPKs for the last 2 years, and earlier he was CPO for more than 3 years. Talking offline, he said now he knows only about transfer pricing and he doesn't know anything else. So I think I present Mr. Ajit Kumar Jain to Mr. Rohan Phatarphekar. He is a partner and the national leader of the KPMG Indian Transfer Pricing Practice. He specializes in TP and advanced pricing arrangements. He is the national leader of global transfer pricing, and he has handled various cases and multinational clients since last several years. I think since the time it is introduced. He is rated among the top 10 professional transfer pricing advisors in the world, in India, and he has 22 years of experience, all around experience as a chartered accountant. May I present to you Mr. Before our moderator, Mr. Vispi Patel. He is a chartered accountant since last more than 25 years in practice, and since the transfer pricing, international transfer pricing was introduced, he is in this line, and he has advised various multinational clients, and he is representing now his work. Senior partner in Vispi Patel and Associates. He has handled various multinational clients, including broad spectrum of transfer pricing, business strategy, business transformation, documentation, inbound and outbound strategies, and all others. Industry includes automobile, engineering, financial services, infrastructure, and all sectors. He has been nominated as India's leading transfer pricing consultant by International Tax Review, World Tax, and Eurogony Legal Media Award. He is also been considered as leading tax expert by International Tax Review World Tax. I present to you Mr. Vispi Patel. Before I hand over the charge to Mr. Vispi Patel, may I request Mr. Yatin Desai to hand over a memento to first to Mr. Ajit Kumar Jain. Thank you, Mr. Vispi Patel. I request Mr. Joshi to hand over the moment to Mr. Rohan Phatarphekar. Vispi, the floor is yours.
Good afternoon, friends on the dais, Yatin, Rajesh, of course my very learned, knowledgeable co-panelists from whom we will learn a lot. I am Ajit Kumar, Sir, Commissioner of Income Tax, always arguing with us at the tribunal, and then I have my friend Rohan Phatarphekar, who's probably been in PT for a long number of years. And then I have my friends here, and I have some seniors here, and I have my junior friends here. And I think the most embarrassing point is to get introduced. I think what are we have other professionals trying to learn a little bit of law here and there, trying to understand transfer pricing. What is transfer pricing? It's a subject probably, and what it is, if I were to start on it, probably 2 hours will go, so I will not get into it. I think the most critical aspect, and I think that's absolutely critical, is that there is chapter 10, and then there is section 48.2, then there is section 80IA, and there is the methodology that is prescribed by the law. So, today, and I mean, hats off to you, in large numbers, my friends have come, Pramod has come from Pune to educate us. Now the point is that, is there any such thing as domestic transfer pricing? I am not aware of it, so I will learn from it. So it's like this, and I think I will give the floor to Ajit very fast. Ajit very fast, or sir, whatever you want to call him. But he's my friend first. So it's like this. We are here to debate specified domestic transactions which has been brought in chapter 10. So I'll do one thing. I'll give you some brain teasers on the way, because if I don't allow you to tickle your brain, then you will only listen and it gets boring. So it has to be two-way traffic. And I think I want to put a caveat to what Dinesh said. I don't want anyone to come back to me, but I want everyone to stand on their 2 feet, because we are all professionals. So therefore it is this. Okay? This is the trick, and this is the most important forte about this particular topic that we have over here. Is that what is the purpose of chapter 10 vis-a-vis these sections? Absolutely critical for us to understand, because I mean, you may do the best economic analysis in the world, you may do the best business analysis in the world, and you may then do the best comparable analysis under Rule 10b too, and you may then select the most appropriate measure under Rule 10c. But what is that focus and the difference in international transfer pricing for international transactions and for domestic transactions is something which will be unraveled as jurisprudence settles down. So therefore, I just leave you with this thought. Why do I leave you with this thought? Because it is important that everyone distinguishes the focus of section 92(1), which stands on its own feet, and section 92(2)(a), which has been newly inserted, to be read with section 92(b)(a), which is then to be read with the sections for which it is important, probably critical, for the computation of arm's length price, because we have to come to what? Fair market value under 48(2), market value under 80IA8, and more than normal profit or ordinary profit under 80IA10. So this is the critical link between them. How do we unravel, how will law unravel, is something which we have to fathom, because law is evolving all the time. So this is the thought which I give to you. And now, what have we done? And the chamber has requested that we try and create case studies which are normal transactions, because now specified domestic transactions, the scope is so wide that every professional is going to get involved in it, because the limit of 5 crores which has been set, I believe, is an absolutely, impractical limit that has been set, because you will find so many domestic transactions which take place, not necessarily for shifting profit, but may take place for various business and strategic reasons. So now everyone is caught into it. And just for your information, probably many may be aware of it, because those who have practiced tax as a law and not tax as an accountancy, you may be aware that SDT, as it is defined, tends to move away from profits and gains of business or profession also, because even section 58 is there. If you want, I will just read that section 58, so it will give you a little brain teaser. I will continuously read the law, because this is specified domestic transactions, unlike section 92. And why? Because it will re-emphasize the importance of those sections. So what does section 58 say? Section 58, subsection 2. The provisions of section 48 shall so far as may be applied in computing the income chargeable under the head income from other sources, as they apply in computing the income chargeable under the head profits and gains of business or profession. This is the first Google. Why? Go back to 92BA. Does it only cover transactions? Under section 48 for the computation of income under the head profits and gains of business or profession, and the answer is no. Why? I'll read 92BA for you now. So this is already the first case study started, huh? You have patience, no? Then we'll continue. Because Hinesh has said we have to close quickly. I am happy to close just now. 92BA states like this: for the purposes of this section and sections 92, 92C, 92D and 92E, specified domestic transactions in case of an assessee means any of the following transactions, not being an international transaction, namely, now the importance of reading the law, any expenditure in respect of which payment has been made or is to be made to a person specified in clause B of subsection 2 of section 48. I will repeat, because they say that in Indian system of schooling, Abhyas is the best. Because I have seen one thing in my life, that the more you read the law, the more you understand the law better. Just like, for example, in marriage, first there is the raspberry fizz, and then you try to understand, each life partner tends to understand each other as time passes on. So it's like this. I will read it again for you for the benefit of your knowledge. It is any expenditure in respect of which payment has been made or is to be made to a person referred to in clause B of subsection 2 of section 48. So it is only referring to persons, and it does not refer to persons specifically for the computation of income under the head profits and gains of business or profession. So this is where you have to read the law minutely. So therefore, if there are transactions in the nature of section 48(2) applicable to income from other sources, will they need reporting? And the answer is yes. Now, there are these case studies. So, we have tried to cover in each case study some critical parts. So what does the first case study want to do? You know, there is this particular proposition of law, and I think we should make ourselves absolutely clear on this particular perspective over here, and I think Sir will agree that when we discuss on the panel, and he's also our brother professional because he's first a chartered accountant, then an IRS officer, and then a commissioner, just as we first are all CAs. Am I right, sir? Fine. So now it's like this. Though I may ask him some questions, it is his personal view, and I think that's something which we all have to accept very graciously, that he will give his personal view, does not necessarily identify with the department view. And that's critical. Otherwise, then there is no fun. So it's like this. There is this concept. And how right this concept is, I do not know. But there is this concept in international transfer pricing that you can notionally attribute income to transactions under section 92(1). Is it correct or not? Is not the question on this table today. So therefore, just to clear doubts, the first case study tries to refer to attribution of income. Is it covered under specified domestic transactions? Is it covered under the so-called domestic transfer pricing? So that is one part of case study 1. Then, the persons which are covered under section 48(2) is indirect holding covered, and we get to that. Then, what is the effect of the amendment in 2012 or 13 to section 48(2) where something like fellow subsidiaries are covered? So that is also covered in the case study. Then most important, where does section 48(2), where is it legislated and what is the heading? So I will read 48(2) before we get to the case study. Not the whole section, only some parts. Because capital account transactions are covered and there is a lot of queries, lot of discussion in various forums on this particular perspective. Whether interest payment is covered. Very interesting. I'll try and give you a perspective which probably will be the opposite of everyone, but I'll try and give it to you because if you don't think, then you can't think. And then, how do you benchmark if you have to benchmark interest? So now for capital expenditure, and that is because this first case study is only on section 48(2), no? So therefore, before we open the case study, for the wisdom from my co-panelists, I will just read one or two important lines of section 48(2). Section 40A finds itself in the chapter on chapter 4, computation of business income. What's the heading of section 40A? Expenses or payments not deductible in certain circumstances. Important for us to understand the play of capital expenditure. I am aware that headings are not to be used only for the purposes of interpretation of law, but you have to read the law as it is. That's the first principle of reading law. Headings will give you an indication, but it is not necessarily the law. So if there is a tug of war between a heading or a marginal law and the law itself, then the law prevails. That's what the Supreme Court says, which under Article 141 is the law of the land, of the Constitution. So what does 40A1 say? We all refer to 48(2), but we should read 40A1 also. Important. The provisions of this section shall have effect notwithstanding anything to the contrary contained in any provision of this Act relating to the computation of income under the head profits and gains of business or profession. And 48(2)(a), the last line I will read, so much of the expenditure as is so considered by him, that is the assessing officer, to be excessive or unreasonable shall not be allowed as a deduction. So therefore, the heading matches with the written law. I'll close it. Now I hand it over first to my friend Rohan. Rohan, your case study, please. Thanks.
Thank you, Vispi. Thank you, Vispi, for the detailed discussion and starting this panel discussion. Also, let me just mention that my name is Rohan Phatarphekar, and the second name is a tongue twister, and normally end up getting pronounced in a different way. I think just to give a background and my perspective on this recipe before we get into the case study. I really don't want to go into the history because probably through the day you understood really what was the objective of introducing the domestic transfer pricing. But and of course it has been there in a lot of countries like US or China, and it's not a new thing that has come to India. But I think the objective of introducing domestic TP, the way the Supreme